Right, let's do this. Oh my goodness. It is almost 11 o'clock. Forget everything I just said. Friends, fellow travelers, in the half-light, I want you to gather closer. My comrades in curiosity. Those of you, I know who you are, those of you who wander in the late hour. Come, tune in, stay with me. Listen just a little. The night's still. The still night. There is still night. The still night in St. Bart's. And my story begins like this. Act 1. My opening invocation. Like static. Macrostatic. That's how these days and weeks feel. The static buzzing in the void left by the government shutdown. A pulse. Where is my pulse? Do I have a pulse? Am I alive? A pulse on the wire. Ladies and gentlemen, it is I, Hugh Hendry, your Blade Runner. I believe there's barely an hour left, but we can still say it is October the 15th, a Wednesday, 2025. The government is half asleep. The market's half awake. And the data stream, that thing flickers like a faulty neon strip. A strange steadiness to these markets. No crashes. This week, no new highs. Everything just steady. Weird, but the beat goes on. The shutdown holds. Hey, maybe they'll never reopen. Would we ever notice the difference? The bills might be less. But the numbers, the data, the economic numbers, they keep trickling in, torturing me with their decimal points. Except, not today, baby. Today. Oh yeah. Today was poetry. Yeah. Oh, wow. Yeah, I had to suffer more bank earnings. They arrived, of course, Morgan Stanley, Bank of America. And damn, they got great share prices. You know, I like my compression. I like my breakouts. And they got it. But I got a rule. I've lived a long life. I've decided I'm not buying banks. Anyway, maybe in the future. I mean, I come from the future. But I promise I can't speak of it. But maybe these charts might mark. So this is a kind of a devil's advocate to my mindset presently. Maybe those bank charts might mark the upper bound of our stock excitement, our excitement for all things financial, all things risk. Morgan Stanley and Bank of America, they printed solid quarters. The financial system is still breathing. Again, but I remind you, the thing that I can't expunge from my mind is that Wells Fargo chart. It made a new high just before, in the chaos and the absolute meltdown, the insolvency, fast approaching insolvency of the banking system in 2007, 2008, Wells Fargo attempted to make a breakout to a new all-time high. So my system of buying as we blast through compressions, it would have failed. Except the breakout above the previous highs was a fake. It was a function of banning short selling. And its half-life was days because Lehman's failed. So, like Hemingway, we have to keep two contrasting, diabolically opposed ideas in our heads at all times. At all times or sometimes? This feels like sometimes. I salute the majesty of the Morgan Stanley and the Bank of America chart. Do I salute? Is it majestic? Bank of America. These peaks. They're all the peaks of, the bounded ceiling on Bank of America. Where is Bank of America? I've got a chart of it somewhere. I'm looking at it now. And the peaks, like just before the bankruptcy of LTCM, Bank of America was hitting like $52. 2008, just before we lost Lehman Brothers, where was Bank of America? $52. When the pandemic struck and interest rates collapsed, when 10-year was at 50 basis points, where was Bank of America? $52. Where is Bank of America today? $52. It seems it's constrained by the high watermarks of our sanity, the sanity of the marketplace. Maybe. But this is the late hour. And maybe I have to confess. I have a confession, sir. I have a confession. What is my confession? Queens County Bank Corp. I promise you, is a short detour. It came to my mind as I was thinking about these bank earnings. Queens County Bank Corp was a thrift. Now, there was a time when that meant something. So to the non-Americans, it meant it was... Forgive me, I still have this cough. To the Brits, maybe to the Aussies, I don't know if you'll get it, or the Kiwis. The UK has a thing called... what are they called? Mortgage banks. Alliance and Leicester. Building societies. Like I've told you about this before. My father's a truck driver. And in their life, they never dreamt that they would get a loan from a bank. If you wanted to buy a house, if you wanted a mortgage, you went to a building society. Banks, Barclays Bank, Lloyds Bank, HSBC, they're like, get out of here. And Queens County, if you will, was a building society. lent you money to buy your house. There's something noble about that. I'm keeping my goggles on because I'm trying to travel back. I'm traveling back. I think it was maybe 1995 when I invested, or 1994 when I invested in Queen's County Savings Bank, which was founded in 1859. How do I remember that? I'll tell you why I remember that. Because it was one of the first times I remember seeing God in the markets. Everyone in the city, everyone in the markets was still cleaning up the mess. We had this thing called the savings and loan fiasco. Deregulation of the financial sector, having, again, almost bankrupted everything. Volcker smoking his cigars, the Texan who raised interest rates to 16%. When he let up, when rates started coming down, I think they fell 6 percentage points, like boom, immediately. And they allowed thrifts or building societies, mortgage banks. They're like, hey, we're sorry. Have fun. Hey, look, you don't have to just specifically lend for mortgages. Yeah, go and make money. And of course, when you tell that to banks, they end up losing money. And here I was buying a bloody thrift. I was buying the outcasts of finance. I remember it well. It was located at Flushing Meadows. That's where the US tennis is. Went there one time. And the market rightly priced them as though they were already dead. And that's how I think of Bank of America. Et al. Comerica. Remember we talked about Comerica from Detroit merging with another Midwestern bank. But me, with my goggles, I saw something else. You see, Queen's County. Queen's County. Oh my God, I need an inhaler or something. Queen's County. Am I really talking about a tiny little bank? Who cares? Come on. Okay, I promise you, it's going to be interesting. Had a spotless loan book. Get this right, get this. It had zero exposure to losses. This was a bank, like lending with no tears. No tears. No losses. Like, not in the last year or the last month or last week. Like, the bank had never, I'm not making this up, it had never recorded a credit loss. Never. People paid the money back. Forgive me the coffee. I'm going to have to get an inhaler. Hold on a second. All right, let's continue. Zero. Where was I? A bank that had never recorded a credit loss. And these lower rates and the cleaning up of the economy, when those low rates went through the economy of Queensborough, the stock, it didn't just rise. It exploded higher. The stock went vertical. It was one of my first monster trades. And not because I was particularly clever. Do you know why? Take a moment. Why? Because I had met, figuratively speaking, I had met Tony Soprano. This was a mob bank, a mafia bank in the American Italian district of Queens. You damn paid your mortgage back. I love that story. That story came before the chart porn. I'm going to explain to you chart porn in another episode because I'm getting ready to do a lot more chart porn. In fact, I'm already doing chart porn. What am I talking about? These ceilings which become trampolines and the energy as prices explode outside and above 10-year moving averages. Anyway, Queen's Bangkok was the birth of it all. Before the gold. Sounds like a Neil Young song. Before the harvest, before the gold harvest. Before all the Western banks went bankrupt. Before they called me mad, Queen's County Bangkok was my acid test. And people, I passed. Right. Jesus. The Beige Book. We got the Beige Book today. I think it was who knows? AI may have been fooling me again, but I believe it was really the only data release of today. And the Beige Book is beautiful. Think of it as the American economy in sepia tone. At 2 in the afternoon, and at 2 on a sleepy American afternoon, the Federal Reserve, on behalf of the 12 districts, released what they call the Beige Book, a document of subtle truth. A favourite of mine. It's like a fireside chat. Not the usual loony maths class. And it reported that economic activity had changed little. It had changed very little on balance since early September. Was that only a month ago? But I want to talk to you about fractures. Sounds like Fibonacci. Fractures hidden in those comforting words were fractures. The Beige Book recalls the shipping news. Don't worry, I'm not going to do any more shipping news tonight. But this is going to be close to it. 3 districts showed slight to modest growth. 3 out of 12. 5 flat as pancake. 4 softening. Boston and Philly, a faint pulse. Modest consumer spending. Richmond. The Richmond Fed, it echoed the same. New York reported that, thank God for luxury demand. I'm thinking the property market keeps propping up an otherwise market which is fatigued. Minneapolis and Dallas tilting downwards. Manufacturing tilting downwards. The ags and the manufacturing strained a little bit by the tariffs. So the 2 sides of America, the coasts, the great metropolitans, hum with the wealth of the wealthy. And the heartland winces just a little bit. Labour, largely stable. But layoffs and attrition are building. Firms are more reliant on part-time and temp. Some comment about AI replacing some workers at the margin. And wage growth. This is one of the big ones. Wage growth is a precursor to. You don't get general consumer price inflation without wage growth. Because wage growth is the money, the additional money in your wallet that allows you to pay the extra 10 cents, 20 cents, 30 cents, 40 cents, till I hear $3 on whatever, on that basket of goods that you have to buy every week at the supermarket. wage growth remains modest. The Beige Book, the Book of Sepia, called it stability. To me, it felt more like recalibration. The takeaway, the district map, the 12 districts, no longer uniformly beige, drifting towards something unnamed. That was your data. But data, let's do data centers. Let's talk about the arms race. Arm holdings, or how I scoffed and made a royal ass of myself with regard to its IPO. I'm jaundiced with SoftBank. I've got to get over it. I just see them as like kind of Ponzi operators. I mean, and even that's a ridiculous thing, but I see them as promoters. Sniff at that. And I thought the ARM IPO was a big promotion and inherently someone was selling. But, I've been hello, I'm wrong. I was wrong. I am a world-class loser. I am a world-class loser. That's not a mea culpa. It's a celebration of who I am. I spend a lot of time, a lot of my daily undertakings, I present the case to me that my actions are wrong. And I consider what I will do in the circumstances of being wrong. That's me. I work very hard on being a loser so that when I do lose, it's not a big deal. And I'm beginning to like ARM. And actually, again, the pension manager, the investment group that I worked for in Edinburgh, they, of course, were the first major, I think they had 10% of ARM when it IPO'd a million years ago, early 1990s, on the British London Exchange. You see, ARM began as a British engineer of phone chips. ARM is the invisible hand behind. Where's my telephone? For some reason I always use my mouse. ARM is the invisible hand behind the pocket revolution. Started way back when your parents were probably your age, 1990. And a bunch of brainy Brits, they said, how do we make chip brains that consume power? They take the pulse of the electrical current like a camel sips on his water humps in the desert. How do we make chips that don't guzzle like a gas-guzzling American truck? And their secret sauce? Well, they've got this chip architecture. It's really fancy words for super efficient recipes that made and do make your iPhone and all other phones run really, really fast. Allows you to play games, look at photographs, go on Instagram, TikTok, make TikTok videos without needing to carry a huge battery. And your battery, this tiny battery, it lasts all day, thanks to ARM. Thank you all. And that's kind of what I missed. Just this little simple insight. ARM completely dominates mobile telephones because its little recipes for how you configure the chip are very energy efficient. And today, the whole full 9 yards, the story of the economy of everything is AI. And AI is controlled and routed into our brains from data centers. And these damn things consume power like a small city. And so the search or the edge is between intelligence and heat. And ARM, the plucky Brits, they're like, well, excuse me, mister, we promise performance without the burn. Without the burn. Are you a burning man? They reported earnings today. That's why I'm talking about it. And again, cynical me, revenues are like $1 billion. They were up 12%. I mean, people, we're not paying these crazy valuations for 12% growth. It's going to take like 6-7 years before those revenues double. I mean, come on. The market cap is like, I don't know, $50 billion. Modest numbers on the surface. But that story, I am your Deutsche Bank broker. It's 6 a.m. Hello, trusted hedge fund guru. I have this great story. Fuck off. No, it's not that we're upgrading European equities. Fuck off. No, let me tell you about ARM. Okay, let me tell you about ARM. Again, the recipe is like the grammar of... ARM is the grammar of computation. And the superscalers, Sam Altman and OpenAI, et al., Meta, Google. I'm now just going to randomly list them slowly. Amazon, Microsoft, Oracle. They're really keen on ARM because ARM's chips can cut the energy use by possibly up to 50% compared to the traditional server architecture. Traditional means Intel and Advanced Micro Devices. We keep talking about AMD and Intel. Now, they actually make the whole thing. The Brits, they're just like on TikTok. They're like, here's the recipe. And they leave it, for everyone else to build these fabs that cost billions of dollars. Anyway, ARM architecture promises less heat. Less heat is lower cost. And so the analysts are expecting that it could, like by 2027, 2028, it should be really displacing Intel and AMD and rewiring the power map and getting 50% of the CPU market going into data centers. Now, that wouldn't just be that would not just be an engineering story. That is philosophy. That is efficiency as ideology. ARM engineering the architecture of restraint in an age of excess. I mean, this is positively poetic. The constraint is energy. Data centers, a furnace of cognition. And with this AI, I would say cognition, the invention, the fights I've had today with my digital assistants. I won't bore you. But data centers are $60 billion cathedrals of heat. requiring that we have to reroute rivers of electricity. Which brings me to something I was talking about yesterday. Oil, the oil price. And was it yesterday I was saying some people talk about the oil complex being $300 trillion. 300,000 yards. The value of the total oil complex. And I thought, can I get to the bottom of this? I mean, my mind honestly is so blankety blank. Did I talk about this last night? I worked on it today. Again, I'm sorry, we're halfway through and this is the promotion. Can you please support the show? I am working 15-hour days. Small violin, I like it. Come over to Substack. Or there's a tipping jar on the damn podcast, like $3 a month, $5 a month. I mean, it's cheap. I mean, I'm burning. I'm a cathedral of energy. Anyway. $300 trillion for oil. I thought, can I get there? So Paul Tudor Jones, another reference from the podcasts of late. Paul Tudor Jones was talking about gold having a mass sort of market value of $30 trillion. So a tenth the size of oil. And Paul Tudor Jones, not today, but I think yesterday he was on CNBC. And he's saying, and he's a southern chap. I can't do the southern accent. I might try, but it'll sound like Burt Reynolds in, God, what was that movie? He's in the canoe and they all go crazy. Paul Tudor Jones, like, Jesus, there's like $300 trillion of financial assets. And I think it's more than that. But I think he was like looking at US equities are $60 trillion. Gold is $30 trillion. Treasuries are round up to $40 trillion. And you're nearly at half. And then bring in, and we've only done the US, and then bring in commercial property. Bring in the other commodities. And he was making that similar dumbass asset capitalist argument. Bitcoin at 2 trillion, you just need modest little revisions in the allocation of the 300 trillion. Someone just goes, hey, let's just put a few more basis points into Bobby Digital. And boom, Bobby Digital will have a market cap of $10 trillion or $20 trillion. And you, my friends, will have made 5 or 10 times your money. That's what Paul Tudor Jones was saying. But I mention that because of the $300 trillion. So that's a huge number. Can we get close to that with the oil complex? And of course, the answer is you cannot. But we can get to a third of that number, which is $100 trillion. And that's like global GDP. And that's like almost 2x the US stock market. That's a big friggin' deal. So how do you get to $100 trillion? I don't know. Do I have notes? I don't know. You got to look at, basically you take all the hydrocarbon companies, all the Exxons of this world that have proven and probable reserves. And globally, private and sovereign, the Saudis, et al., I think we've got $1.5 trillion of proven and probable reserves, barrels of oil. And at current prices, it's like $100 trillion. And there's about $1 trillion of inventory, strategic stock, et al. $110 trillion. 300 is a myth, but there is a gigantic paper market value held in oil futures, options, hedges, sovereign swaps. I think of it as the fractional reserve of energy, a kind of financial invisible mirage built on other people's either greed or fear, depending on where you are in the cycle. Call it hedging. Anyway, it's damn big. And yet oil today trades like $56. It's kind of where it was in 2005. It's 20 years ago. It's halved in the last 3 years. It's kind of half since AI arrived on the scene. AI that's brought the data center fever. These cathedrals of heat that need energy. I'm like, and I look at the charts. The charts are saying it's going to $40. Does oil? Disraeli was Prime Minister of the United Kingdom. Let me say that again. Does the oil price suggest economic Armageddon? But then what does the gold price represent? Because gold is at record highs and oil's on its ass. Oil, does it represent the cost of extraction? Does gold represent the price of belief? And belief in what, quite frankly? Is the oil price saying that if there's hell below, we're all going to go? That we're the Beige Book and the districts of America beginning to feel pain? The widespread economic pain, forget the stock market, but the widespread economic pain in China, in Europe, is that set to get worse? Is that what the oil price says? And if it does get worse, governments have to step in and try and bail the economy, print money, the fiat currency fear. Definitely the spread between oil and gold is the story of right now. And funny that oil, the energy, if you will, it's feeding the knowledge. All of my knowledge today is coming from my digital assistants. Am I really walking around thinking like a genius? Thinking I am a genius? And yet that knowledge seems to be rewriting value. Knowledge is making people trade faster, quicker, cheaper, and they're trading and buying gold. I don't know. I shared Benjamin Bray of Bray or Bree Capital Misallocation. We were swapping mostly he was swapping charts with me today, and on the Substackers I will share his deck. For the rest of you listening in, sponsor me, DM me. Hey, DM me actually with questions. I'd like to take on more questions. But sponsor me. Anyway, there's the traditional gold inverted by divided by US money supply. The traditional relationship is the more money. What is it? Money supply. Ooh, I'm in the dark. I'm just going in the dark. Money supply is that the totality of deposit checking accounts in US banks. That's M2. The more money that's in your bank account, the more ammunition you have to chase and afford to pay higher prices. So that's a positive sloping curve chart over time. It conforms to that. And so, I mean, it's not, I promise you, M2 is not surging. Again, this is not the 1970s. money is not being funneled into households to enable them to pay higher prices, and therefore tariffs, which do raise prices, mean that consumption has to wither because the totality of budgets, financial budgets, can't stretch, expand to accommodate the same volume at a higher price. But oil to M2 is really divergent, and the gap between those two is quite striking. It's a very cute chart, very cute chart. I may post it on X tomorrow with Ben's permission. I want to close for tonight. Forgive me for my croaky voice. I'm going to Fade to Grey. Fade to Grey was one of my favourite songs in the early 1980s when I was a new romantic. I'm dressed like a bit of a new romantic tonight. I think this is actually a girl. I'm wearing kind of like a girl's vest thing, but it says Rolling Stones and whatever. Anyway, Fade to Grey. Let's do it. The Beige Book hums. What does the Beige Book hum? It hums a neutral song. Arm, I didn't get you initially, but now I just love you. I'm not ready to buy your stock, but I love the story. Building the skeleton of computation. Banks, they merge, they rename. I don't trust them. Again, are they telling us? Are those false flags? When I look at those price breakouts, Bank of America, is it a false flag? Is the real signal the oil price, which is down below heading to hell, suggesting that these banks who pretend to be heading to paradise ain't gonna make it? The nations of the world drift, steady but tense, like my yoga postures of old. I thought I had karma, but I had tension. I had tight hamstrings. Everything, of course, is half light, half shadow. My brothers and sisters, I had to say it. America in sepia, arm in ascent. Queen's County, I forgot to tell you, Tony Soprano's stock, it got acquired. They got acquired, I think, 2020 during the pandemic. Absorbed, but not forgotten. The government may be in shutdown. The market may be speaking in... Hold on a second. I'm putting my goggles back on. I'm doing the ending goggled. Okay. But yeah, I've started... To those listening, forgive me, but I have started tentatively. I'm probably going to be banned from it. Recording it. You see, it's late. If you can see it, it's late night. The night is still. Everyone is asleep except the acid capitalist. Anyway. Oh, and I am sharing little snippets on Instagram. Hugh Hendry Official. Come and join again. Come and join. Hendry _Hugh on the X. Hugh Hendry Official on YouTube channel. And across that, and there even is a TikTok, and I'm going to have to start putting content on it again. But you will see snippets from my iPhone. Remember, what did I say? Video may have killed the radio star, but the iPhone, the cinematic lens that I'm filming this on tonight, killed the TV companies. My brothers and sisters, the market speaks in whispers. You just have to listen. It has been my pleasure. Good night from St. Bart's. My love to all of you. Until tomorrow, bisous.